Hey everybody, I am Carla Dennis and I am a licensed enrolled agent tax strategist and I am the CEO of Carla Dennis and Associates Inc. Today, I want to talk to you about how you can save on taxes utilizing your real estate. I think it's so important that we do everything that we possibly can to get the biggest return on our investment. Why do I say that? Because we are dealing with inflation. We are dealing with a recession. We have been dealing with rent control. We have been dealing with an eviction moratorium. We have been hit with so much as real estate investors that it is prudent that we do everything we can to squeeze as much juice, our money, out of our investment as humanly possible. And within the confines of the law. There's been so many law changes over the last 4 to 5 years that it is incredible. Our taxes are going up. Our income tax system is extremely complicated. And it really takes somebody that understands tax, understands the system to navigate it. It is extremely complicated, and the average person that's out there trying to prepare their tax returns, it is extremely overwhelming. Many of you are Googling for answers. Many of you are reaching to your existing tax professionals, and you are struggling to reduce your tax bill. You are struggling to get the biggest return on your investment that you can. That is why I want to make certain that I give you some actionable steps and some strategies that you can employ and utilize today to reduce your tax bill. The good news is that the tax system is set up for the investors, for the wealthy people, the people that know how to invest their dollars to be able to save on taxes. The sad part is the average person does not know how to do that. That's why we wind up with literally two tax systems. We wind up with a tax system for the rich, the people that can invest and understand it, and a tax system for the poor, the everyday working person that will never understand it. Well, today I am going to give you a training that is going to help you reduce your taxes, and it's literally just going to be an entree to what I'm really going to be bringing you when I speak at the Apartment Owners Trade Show in Long Beach coming up here shortly. So I am going to jump over to my iPad and show you exactly what I'm talking about. So bear with me for just a moment while I jump over to my iPad and give you some great information. Okay, so as you guys know, during the Trump era, we had the Trump tax cuts. And so, what did the Trump tax cuts do for us as real estate investors? The Trump tax cuts came in and they allowed for a big expensing of equipment, right? Anything that we purchase in terms of equipment that we can classify as equipment, we are able to write that off in the current tax year. And so I want to give you an example of how that can help you as a real estate investor. So when we invest in our real estate and we actually say we invest in a house, and I am not an artist, but you guys are going to bear with me, right? Let's say that we invest in our little house here and so forth. And so one of the things that came of that Trump tax cuts is our ability to expand on expensing out equipment associated with our property. Now, when you say, you may be thinking, okay, Carla, equipment, what do you mean by equipment? Let me tell you what I mean by equipment. When we buy real estate, we know that we're buying building. If we are getting real estate that's connected to the land and it's not like a condo, for example, we know we're going to be able to appreciate the building associated with the acquisition of that real estate. However, we also know that buildings come with components. Buildings are comprised of plumbing, we have windows, we have electrical, we have other equipment within our building. So one of the strategies that we can easily deploy is a strategy that's called a cost segregation strategy. This strategy right here allows us not only to look at property we purchased in the current year, but it also allows us to look at property that we purchased 5 years ago. And so in doing my studies and analysis, I can say with pretty good confidence that if you purchased a property within the last 10 years and you looked at doing a cost segregation study, you're going to get some big bang for your buck. But let me show you in this example of how we can maximize the utilization of a property that we placed in service this year using the Trump tax cuts. And then we're going to tag onto that some law changes that came in the Inflation Reduction Act. So let's go back to my little house example. So we have our house, we have the roof line of our house, right? And let's say that we decided that we were going to put some solar panels on our house. And maybe they won't look like this, but for purpose of our illustration, they're going to look like this. Let's say you decide to invest in some solar panels. Notice the word I use. I said invest. That's a key word because anytime you are investing, there's typically a tax code that is going to allow you to have a good write-off. So investing is a key word. Write that down. Not expensing, but investing. If you were, for example, to invest in solar on your property, and let's say that solar cost you $50,000, okay? And let's say that 85% of that solar is going to be your write-off, okay? That is going to literally give you a cost basis of $42,500. And let's say that you are in the 33% tax bracket overall, that you're going to be paying taxes at 33%. You would end up with tax savings of $14,025. Why? Because you would write off 100% of this $42,000 of your investment. You're going to be able to write that off in the current tax year. And that's a result of the Trump tax cuts. So that's a beautiful thing. Literally, in the past, you would have to depreciate that over 27 and a half years, right? To take that write-off. But now you're going to be able to write it off all in the year of acquisition, in the year of your initial investment. And you want to do that. You want to accelerate your write-offs because time value of money. Accelerate your write-offs. Therefore, this strategy will give you a savings of $14,000. But I want to tag on to this strategy, and I want to go to the recent law, the Inflation Reduction Act. Now, I just want to tell you that when I am speaking at the trade show, I'm so excited about this. When I am speaking at the trade show, I am going to break down for you all the different things that are in this Inflation Reduction Act. Why am I going to do that? Because the Inflation Reduction Act rolled out a massive amount of tax credits. Now, I'm going to segue for a moment because I need you to understand tax credits. Tax credits are important. Why? Because if your liability for tax, let's say, for example, you do your tax return, you wind up with a total tax liability of $20,000, as an example. If we can get you some tax credits, let's say I get you a $5,000 tax credit. That tax credit reduces your tax liability. That means you would only pay $15,000. So tax credits, my friends, are dollar for dollar. I love tax credits. The Inflation Reduction Act has a massive amount of tax credits. And I want to show you one that you can utilize that is going to help you. So let's go back to our example here where we invested $50,000 here that we invested in solar for our property. So now we got our write-off, but we got that $50,000 invested in solar, right? There is a tax credit in the Inflation Reduction Act that has been expanded that is going to allow us not only to expense out that write-off, that $42,000 where we had the original savings under the Trump tax plan, you're going to get that plus you're going to get the tax credit. So you're going to get the 30% tax credit here, which is going to give us another $15,000 tax credit. This is dollar for dollar. This is so important. So important. Why? Because tax credits reduce tax. And so if you are sitting on a tax bill and you can get tax credits, you are really going to be able to reduce your tax liability down as much as possible. Some of the tax credits are refundable credits, meaning you can get money back in your pocket. And some of the tax credits can be carried forward to a year where you owe tax. So I want to talk about that for a moment here. Tax credits they are dollar for dollar against tax. Tax credits are always better than a tax deduction, but we got to weigh it out. So you want to make sure you get your tax credits dollars for dollar, right? Tax credits can sometimes be refundable. Not all of them are refundable, but I'll talk about which ones are refundable definitely when I speak at the trade show. So we're going to definitely talk about tax credits that are refundable, meaning that if I have a $15,000 tax credit and if it's refundable, I'm getting that money in my pocket. That means our government is going to mail me a check, regardless of whether I have a tax liability or not. That's a big deal. In addition, some tax credits you can carry forward. What does carry forward mean? That means that, let's say you have your 2022 taxes, and let's say your tax liability overall, as an example, was $10,000. And let's say you had a tax credit available of $15,000. Well, that tax credit exceeds the $10,000, so you have $5,000 left. In past years, you would potentially lose this $5,000. Well, some tax credits are going to allow you to carry this forward to the next year, like 2023, 2024, carry it forward into the next year. So what's really important, and these are the takeaways that I want you guys to definitely understand. It's so important that when we have these types of tax law changes, that you bake into your tax plan the ability to reduce your taxes for years. This is why I say we accelerate our tax write-offs. We allow each year to take care of itself. If we are sitting in a year right now, right today, where we can pull in Trump tax cuts, layer that with Biden's Inflation Reduction Act, and we can get ourselves a massive tax write-off, plus we can get ourselves tax credits that can pad our taxes for years and years to come. And I can bake in my tax savings, like literally lock it in, almost like refinancing your home and locking in a low interest rate, right? You know, you got that interest rate locked in for a certain period of time. Well, when you are layering tax laws and using strategies, you are locking in, and I like to say baking in, tax savings for years to come. I get so excited about this stuff because I am telling you, inside every single law change that comes out of Washington is always some type of tax strategy. Why? Because these tax laws are meant to get the economy moving. But as many of you know, our economy rises and shines on investing in the economy. And all of that is paid for through taxes, right? So you're either going to be on the side of investing, or you're going to be on the side of paying taxes. I want you to be on the right side, and that is the side of investing, keeping your hard-earned money in your pocket, which is why I want you to join me at the Apartment Owners Trade Show that is happening October 27th in Long Beach. I am going to be speaking, talking about real estate tax strategies, talking about how you can keep more money in your pocket, and giving you some actionable steps to help protect your investment and to help you get out of some of this cloud that we've been in over the last few years with all of the changes that have happened and what is on the horizon. Taxes are the one constant, and I am just the person to help you navigate it. I can't wait to see you in Long Beach.